When we think about what makes a good investment idea or not, a lot of it's driven by two things: fundamentals and valuations.
So you had a lot of roles here: analyst, research director, portfolio manager. I'll ask you the impossible question. Which was the hardest?
We tend to favor revenue bonds historically because A, we can do the research, and B, you tend to get paid a fair amount more to own revenue bonds versus a general obligation bond. There's so much to think about when you're investing, and I think the great investors can really filter out that noise and focus on the signal.
Today, I'm joined by Courtney Wolf. She is a fixed income portfolio manager based in West LA. She's been at Capital Group for 19 years. Welcome, Courtney.
Thanks for having me, Mike.
So I am going to come out of the gates hot. And I'm coming out of the gates because I saw you this past weekend. And I saw you with your husband, Chris, and your two beautiful children. And Weston was in the stroller, and Carson, the big sister, was behind. And Weston had a book in his hands. Could you just share a little bit about the book that he was reading, the picture book that he was reading?
Yeah. So first of all, they love when they see you. You're so kind to them, and they usually have probably snot on their face.
No, they're super cute. Like I don't even remember my kids being that cute.
But they light up when they see you. And Weston had a picture book that Carson had given to him the night before. So she got a Polaroid camera recently and is excited to take pictures of him, and had filled up the picture book of basically pictures of Weston. And then decided in order to get a new picture book and more film, she needed to give away her existing picture book. So she gave it to him, and I took him out for a walk, and he wanted to take that with him. And he was flipping through it as we were sort of walking through the...
Well, he loved it. You weren't grabbing that from his hands. He loved it. All right, so you joined Capital Group. We've talked before in our podcast about the CAP program, the Capital Associate Program. You joined in that program, and when you joined, the muni market was largely an insured market. Municipal bonds had been largely insured. Then all of a sudden, they weren't. Can you talk about joining at that time?
Yeah, it was a really interesting time to join fixed income, and specifically the muni team. So you're right. I joined Capital a little earlier than the financial crisis because I did the rotational program, and then joined fixed income during the financial crisis. So fascinating time to be coming into the business. And I learned a lot, and it's been really instructive in terms of how I think about risk. And I learned a lot from watching, really seasoned investors. And during that time, the muni market changed a lot as well. So as you mentioned, the muni market was largely insured, or probably over 50% of the market was insured by AAA bond insurers pre-financial crisis. So it was viewed as a market that had very limited credit risk. Because again, these bonds were AAA rated. So credit spreads, which is the yield you can earn over the risk-free rates, were quite narrow. The monoline bond insurers got into trouble. And that insurance was worth a lot less. And the market went from super high quality to now having quite a bit of credit risk. And spreads widened as a result of that. So it was a really exciting time to join the muni team and fixed income. And I'm really grateful I had an opportunity to join at that point.
So going from largely an insured government-like bond market to really one of credit risk. Default rate's still low, but plenty of credit risk and plenty of opportunity.
Yeah, that's right. And people would sort of look at their portfolios and say, I thought this was AAA. I have no idea what I own now. I don't own a AAA piece of paper. So doing credit research added tremendous value and continues to add tremendous value today.
So it's a $4 trillion market, the muni market. And I think there's something like 50 or 60,000 issuers and nearly 1 million CUSIPs. So how do you go about that? There's so much to choose from, so much to stay away from. But how do you go about constructing that kind of portfolio? And also, just for those who don't know, why are muni bonds so important?
Yeah, so muni bonds, I'll take a step back and just frame the muni market. So muni bonds are the way that a lot of the infrastructure in the U.S. is funded. So think about state and local governments can issue muni bonds, electric utilities, water and sewer authorities. A lot of our transportation assets are funded in the muni bond market. So it really is a market that helps us fund infrastructure in the U.S. Now, the buyers of that those bonds get a tax-advantaged way to generate income because a lot of the income generated from muni bonds is exempt from federal taxes, sometimes state taxes. So a tax-advantaged way for U.S. domiciled investors to, again, invest in U.S. infrastructure. The muni market is known for having just tremendous CUSIP diversity, issuer diversity, as you mentioned. And so when I'm thinking about building a muni bond portfolio, I really start from a bottom-up standpoint. We have a tremendous team around me. So we have 9 analysts who invest alongside of me. I would call them sector specialist investors, and then 5 dedicated traders. And they really help come up with sort of investment ideas from the bottom up. When we think about what makes a good investment idea or not, a lot of it's driven by 2 things: fundamentals and valuations. So when I think about fundamentals, and that's really trying to assess the credit risk of a particular issuer, there's a lot of different ways one could think about it. Again, I have the opportunity to rely very heavily on the analysts, and I do that. And the things that they look at, it really depends on the sector they're covering. But you might think about demographics as an example. So, what are the demographics in the local area? Is the population growing or shrinking? How does a job market look? One might consider the willingness of sort of politicians to make difficult choices. So raising taxes is never a popular thing to do. However, it can help put a state or local government in sounder financial footing. And then a lot of these are monopoly entities. So, one may consider if rates are raised, will that impact demand? And sometimes it does, and sometimes it doesn't. So there's a lot of different ways you can try to assess credit fundamentals. But it's sort of where we start. And then the second piece is valuation. Every buy and sell decision is rooted in valuation. In my mind, there's never sort of a bad bond. It's just a bad valuation. And there's a price for everything. And so we think a lot about relative value between issuers, between CUSIPs, and sort of think about if it has the same credit fundamentals, which one has the better valuation. So that's sort of building the portfolio from the bottom up.
And when you think of revenue bonds, water, sewer, and then you think of general obligation bonds, with credit research, I imagine we tend to be largely overweight revenue bonds, but can you speak a little bit to how you think of revenue versus GO or general obligation?
Yeah, general obligation is really sort of a promise to pay from a state or local government, and they're viewed as fairly high quality bonds. The revenue bonds are bonds paid from a specific source of revenue, so a toll road as an example. Those bonds get paid by toll revenue that road generates. And so as a team and as a firm that has tremendous sort of analyst resources, we tend to favor revenue bonds historically because A, we can do the research, and B, you tend to get paid a fair amount more to own revenue bonds versus a general obligation bond.
So when you think of politics, macro, how much does that come into play? The Fed, if the Fed's going to cut by 100 basis points and that's your expectation, will you go long duration, or are you really primarily focused on credit? How much does that macro come into your portfolio construction?
Yeah, the macro plays a pretty big role in my portfolio construction. So again, the analysts help me build the portfolio bond by bond. I really focus on ensuring that when I look at that portfolio from a top-down standpoint, it expresses a view that's consistent with my macro view. And I think a lot about interest rate risk. So what is that portfolio expressing from an interest rate risk standpoint and an overall credit risk standpoint? So I think a lot about macro and that environment when I'm building portfolios.
Makes sense. So you majored, you weren't trying very hard. You just majored in economics and engineering. So you majored in both. How much does engineering impact your approach?
It impacts it a lot, Mike. I would say, obviously, the technical skills I learned as a computer engineering, maybe a little less relevant as I invest. But in terms of the way that I learned to think as an engineer, it really drives how I build portfolios. So as an engineer, you're effectively trying to think about what problem you're trying to solve and how can I get there in an efficient way? And so when I'm building bond portfolios, I think about, what do clients and shareholders expect and want? So strong risk-adjusted returns. And then what options do I have to sort of get there? And what's the most efficient way to build that portfolio? And then we continue to iterate every day. I never assume that portfolio is perfect. I come in every morning excited to get to work and to continue to make a more efficient portfolio.
So if you're artist and scientist and you can't choose 50-50, you have to choose 60-40, are you more artist or scientist?
Much more scientist.
So it's more than 60-40.
Yeah, I would say 80, 85,
okay,
90.
That's a big number. Okay.
So definitely that engineering mindset really does sort of drive how I think about building portfolios.
And you look across the credit spectrum. So tax-free high yield, I always call it the sweet spot in the world of bond investing because it's a little bit of a misnomer where it's high yield-ish, but it's much higher credit quality than taxable high yield. Today, a tax-free high yield portfolio might yield 4.5% or 5%. So the taxable equivalent's probably 7.5% or 8%, which is right on the taxable high yield market. How should we think about whether I should own taxable or tax-free high yield?
Yeah, it's a good question. I would say for those investors who pay taxes in the U.S., I think taxable munis are pretty interesting on a taxable equivalent basis. So whether you think about high-grade munis versus the taxable ag, or again, high-yield munis versus the taxable high-yield equivalent. The tax equivalent yields, I think, are pretty compelling. And as you mentioned, the credit risk in munis is actually historically has been quite low. So defaults have been fairly low. So you're getting a pretty high-quality option and attractive taxable equivalent yields, again, for those individuals who are tax sensitive.
And tax-free high yield also has a much longer duration. So if you are thinking we may be at the top of the rate cycle, it's pretty good to own duration and there's some opportunity there.
Yeah, I think that's right.
Fast forwarding to today, how attractive or unattractive is the muni market, the municipal bond market, relative to history?
Yeah, I think yields are pretty interesting today. So we've obviously had a tremendous backup in rates. And so, munis are sort of historically known for providing tax-exempt income. You can now get that tax-exempt income. So again, relative to taxable alternatives, I think they look pretty compelling. And yeah, you get a pretty high credit quality as well. The fundamental picture for munis is quite good. So we came out of the COVID era in a really strong spot, largely because the federal government provided a tremendous amount of stimulus to a lot of state and locals and other entities that benefited. So fundamentals are good, yields are higher. I like them.
So you had a lot of roles here: analyst, research director, portfolio manager. I'll ask you the impossible question: which was the hardest?
Yeah, they've all been challenging and rewarding in their own way. I think the most challenging one for me is probably the research director role. Investing, so whether the analyst role or the portfolio manager role, really fits with my demeanor. Again, we sort of talked about scientist versus artist. I just kind of, that role tends to resonate a bit with my personality, whereas people are different. Everyone is different, and I had to work.
That's one way to put it. People are definitely different.
I had to work really, really hard at the role. Trying to understand, what drives someone, what someone's sensitive to, what do they care about. Everyone is different. And so for me, that was a bit more challenging. However, I'm really, really fortunate that I got an opportunity to be in the research director role. I think, it made me a better colleague. I think it made me a better investor because I got to work with lots of different analysts across asset classes, and I got to work with a lot of different PMs as well. And then finally, I got to work with a lot of great people. So it was a wonderful, rewarding experience while challenging at the same time.
So how many years were you in RD, a research director?
I believe 4 years.
4 years. And is that the right amount? Too little, too much?
That feels about right.
That feels about fit. You weren't looking for a fifth year.
I was happy to do the role, and again, it was a rewarding experience. But I did not shed a tear the day that I rolled off that.
It's
role.
hard. I mean, we ask people to do so much, and when you're doing that role, many companies, you're the research director, but that's all you do. At Capital Group, that is one of your jobs, and you're also still an investor during that time frame. How did you manage your time? Because you have finite time and an infinite demand for your time. How did you manage that?
Yeah, it's a good question. I found that there were some efficiencies I could wring out from my investment process. And so you sort of wring out some of those efficiencies, some of the things that I was doing in the past that I thought might be useful, but really maybe were just noise. And so from that standpoint, maybe it made me a better investor to really force myself to focus on what truly matters. And then there are a lot of sort of tips that people gave me, sort of trying to block out calendars for specific periods of time. But again, it really forced me to focus on what matters. There's so much to think about when you're investing. And I think the great investors can really sort of filter out that noise and focus on the signal.
Got it. Okay, I'm going to shift a little bit to the office treasure hunt, which is one of my favorite parts. So in your office in West LA, one of my favorite Capital Group offices, there's this very large hat, and we have both listeners and viewers. It says, "It's a muniful world." So tell me a little bit about why this hat is important to you. And also on the screen behind me,
for a minute.
I'll let you put that on. And on the screen behind, we have a great picture with other folks wearing that hat in our West LA office. Describe all of the above, if you would.
Yeah. So this is I like that we're talking about this. It's a Muniful World is sort of a play on Louis Armstrong's What a Wonderful World, which for those of you that don't know that song, it really is just a lovely song that talks about and sort of celebrates the wonderful things in this world. And so I was asked to do a toast for 3 close colleagues in the Muni group who were all celebrating very meaningful CG anniversary milestones, I think within a month of each other. So Sue McDermott, who's on this picture, she was celebrating her 25th CG anniversary, a Muni trader. Carl Zeile was celebrating, I believe, his 20th CG anniversary. He's a Muni portfolio manager. And then Chad Rock was celebrating, I think, his 15-year
15, 20, 25. So 60 years of anniversary.
Yeah, which is, again, it's really neat to be in, such a tight team that's celebrating those types of milestones. So I did the toast. In sort of typical fashion, I talked about each one of them, but at the end, I wanted to weave it together in sort of a meaningful way. And so, one of the things I think that all of those 3 brought was just an impact on me that I wanted to bring my best self to work every day, to work as hard as I could on behalf of clients and shareholders. And it was a team in which they helped make just a great place to live and work. And one might say a wonderful world. And in this case, because we're in munis, we said it was a Muniful world. So it's a fun hat. And I love telling that story and sort of celebrating those 3 individuals and our team.
Well, usually we put the prop away, but I'm going to keep it up here for the rest of our conversation. I love that hat. And our municipal bond team, the group you mentioned manages about $60 billion of client assets. That collaboration is so strong. I mean, the culture in the Muni group is so strong at Capital Group. Can you talk a little bit about how that tax-exempt or Muni team works with the Taxable team? Because we're all one big happy family. So how do the groups work together? Yeah,
we work pretty closely together, which is fantastic. I would say not only do we work closely with our fixed income colleagues, but we work closely with our equity colleagues. So I would say I'd point out 2 different ways. The first is that a lot of corporations in the U.S. And even sort of global corporations, frankly, have ways to issue municipal debt if they're funding public infrastructure. And so I pay a lot of attention to what's going on in the corporate market, particularly those issuers that have muni debt, because it does really impact some of the holdings that are in the portfolios today. So that's one way, is just those analysts that are covering the companies that impact the portfolios. I think that's really helpful.
Absolutely.
And then the second thing is, I learn a lot from our taxable colleagues, our equity colleagues, just about portfolio construction and macro. So it may be thinking about how do I want to size a risk in the portfolio, and I may check in with one of our taxable managers and say, how would you think about this? But people at Capital are wonderful at sharing what they're up to, how they're thinking about portfolio construction, and how macro informs that. And so I lean really heavily on our taxable investors for insight on how to build muni portfolios.
So the rates team, for example, we have a really strong rates team. If the rates team in their taxable portfolios through Portfolio Strategy Group and their own investment results, if they're pushing towards long duration and a steep yield curve, will that influence your own duration and yield curve position in your own portfolio?
Yeah, it will. It won't directly translate one for one, because the taxable or the treasury market does look a little bit different than the muni market. So there is sort of this translation that I do. But those signals, what let's say the U.S. rates investors are doing, are really strong, and they're a critical input to how I'm thinking about, let's say, overall interest rate risk on the muni side.
And team structure, team meetings, can you talk a little bit within the municipal bond group? Do you meet every day, every week, every month? Talk a little bit about that team unity and the team structure and how you all collaborate.
Yeah, it's a good question. It's sort of all of the above.
Yeah, yes.
So I love to
all of the above.
Yeah.
Got it.
I sit on the trading desk as much as I can, and I love sitting on the trading desk. I think part of my role as a portfolio manager is to really harness all the great ideas that are coming through from the team. And one of the ways I think I can do that best is to just be around the individuals. So I sit on the trading desk, which is some analysts sit on the trading desk. Obviously, all of our traders are on the desk. And so we're constantly having dialogue about, hey, what are you seeing? Here's a bond that traded. What do you think? And so constantly having that dialogue. We do have team meetings where sort of analysts will share more formal investment recommendations, and PMs will also share what they're thinking. And so it's a little bit of both. And then we obviously use a lot of technology as well to share ideas.
You're an accomplished investor, but you don't get everything right. When you get something wrong, is there a pattern? Is there a reason why you're typically wrong on something?
Yeah, it's a great question, and one that I try to ask myself every day, because I want to get better and better, and markets teach you things. And so I tend to have a fairly structured investment approach, one in which I view that bonds from a valuation standpoint tend to revert to the mean. So when, let's say, the market tends to worry about the economy weakening and everyone wants to sell high yield bonds, spreads can widen a bit. And I want to take the other side of that, knowing they will probably compress as the economy gets better. And so trying to accommodate the market and buy when sort of the everyone else wants to sell means you can be early an awful lot. So I tend to be early. Contrarian, but early. And so that's something that I've noticed about myself. And I try to push against that tendency or that bias, just knowing that I may be able to put that position on or express that conviction even more size later on if the valuation gets more compelling. So I think about pacing. I think about sizing of a conviction to try to push against that bias that I have to be early on things.
One of the really great things about Capital Group is you can be a bit early, though, in terms of how we measure long-term results, where 8 years are most important, and then 5 year, where the 1 year is the least important.
Yeah.
But you still push yourself not to be so early.
So early, yeah.
Got it. And then your investment edge. Favorite portion of these discussions is learning your investment edge. What's your unique edge that helps you generate results over the long term?
Yeah, I would say, first of all, I'm a part of a great team. So I really focus on trying to leverage all the wonderful ideas coming through from the analysts and traders and frankly, other portfolio managers. So I try to do that in a structured way. So if you said, Courtney, what's your investment edge? I would say, building portfolios in a pretty structured, dispassionate way that tries to take advantage of all the great ideas coming through from my colleagues and putting them in together in a way that I think should generate hopefully strong risk-adjusted returns moving forward.
That's a great edge. All right, we're going to make a personal pivot here.
Okay.
You were an athlete in college. You played both basketball and lacrosse. And then in lacrosse, someone convinced you to take it up. And several years later, you were captain of the Northwestern team that won the national championship. So I say that not to embarrass you, but just to say that's pretty remarkable. And the other thing, and for those who are listening, not watching, this is to embarrass you.
Yeah, I was going to say those that are listening have an advantage because
those who are listening, maybe you'll tune into YouTube and watch because we have a picture of Courtney up on the screen, and Courtney was named Illinois Woman of the Year state winner. And this is a young Courtney Kester, not Wolf, at the time.
Yep.
Tell us a little bit about that experience, because I do think it shows your competitive nature. You're very competitive.
Yeah.
Tell us about that experience in college and how it how it all came about.
Yeah, the plan was always to not play sports in college, but I happened to play too. So I went to Northwestern and decided to walk onto the women's basketball team. That was a character building year, I would say.
So freshman year.
Freshman year, yep. Okay. So our team did not win a single conference game. And I am, for those of you that can see, I'm not sort of gifted with height. I was the shortest player
Vertically
in the Big Ten. Yes. Yep. And couldn't shoot. So a pretty difficult combination when you're trying to play Division I basketball. So it was it was a character building year, one that I was not sad to see sort of come to an end. And then I decided I was going to, again, go back to just being a normal sort of student at Northwestern. Fast forward probably 6 months, I have an identical twin sister. And we were, I think, waiting to cross the street. And this woman jumped out of her car, introduced herself, and said, I was hired at Northwestern to start the women's lacrosse program here. And I want you to, I've seen you play intramural sports. I've seen you running like really far away from campus. Like, I want you to play lacrosse on my team. And we said, thank you, but we've never played lacrosse before. And frankly, like, I don't even know what that sport is. So for those of you that don't know lacrosse, and it will be an event in the Olympics in 2020.
Is this the first time?
I believe it's coming back.
Okay.
But it will be a sport in 2028. It's played on a big field. There's 10 on a side. You throw this kind of little hard ball around at the end of a stick and try to shoot in a goal. So we politely declined and didn't think anything of it. I think a day or two later, she was able to find our contact information and emailed us and said, I want you to reconsider. I'll teach you everything you need to know. Don't worry about it. Politely declined again. And then she said, look, just come into my office. That's all I ask. Just come into my office. Talk to me.
Yeah.
So we're like, okay, what harm could that do? So we walked into her office and I was sold. Like, she was, at the time and still today, one of the best lacrosse players to ever play the game. Now probably the best coach or one of the best coaches.
She's still at Northwestern?
Yeah, she is. She talked about her coaching philosophy, which really resonated with me. And she said, look, we need 2 more people to fill this roster so we can scrimmage full field. And we're going to win a national championship in 4 years. So
from not having a program and not being able to field a team.
We're going to win. And so she said, here's a VHS tape of the game, which happened to be her winning a lacrosse championship like a couple years before. Go home and watch the tape and take these lacrosse sticks home to Indiana, which it was Thanksgiving. So we were going home to Indiana and just take these lacrosse sticks home and just see what you think. And so we came back and really said, yes, we're in. And it was so much fun to learn a new sport with someone that's that talented. And a group of teammates that were amazing. Like they were recruited to play lacrosse, and there were two individuals that had never seen the sport before.
That looked
like,
very similar to one another.
Yeah. I was taking the opening face-off of a game I had never sort of actually seen in real life. So yeah, it was a really fun experience. And that first year, our record was not great, as you can imagine, but we got better every single year. And the last year we went undefeated and won the national championship.
Amazing story.
It was a wonderful experience. I'm still very close to the coach, to the players. We had that shared experience. And I think a lot of what I learned really stays with me today. So when I think about trying to get better every day, facing adversity, really believing in yourself, and sort of being surrounded by really good people. It's really sort of stuck with me today, and I think helps me make, frankly, be better investment decisions and be a better person.
Well, you take that competitive spirit onto the muni field every day, and we benefit from that, and so do our clients. I want to ask you, your identical twin sister's a vet.
Yeah.
So obviously you have a dog, cat. You must have animals in your house, right?
Did our 4-year-old plant that question? Because she asks me every day when we're getting a dog.
So what's the answer? Not anytime soon? Or
Not yet.
Not yet.
Open-ended.
Okay, we're going to have to talk to your sister, see if she can't convince her lacrosse playing sister to get a dog or a cat. We'll finish up with what you like to do for fun. What do you enjoy doing outside of work?
Yeah, it's a good question. I would say the complexion of that answer has changed quite a bit with 2 young kids. So 5 years ago would have been a little bit different. But I love being a mom. And we're in that really special time where the kids are quite capable, but they're not into scheduled activities except for naps, which, do you remember the period of time when the world revolved around naps?
I sure do. 20 years ago, but I remember it.
Yeah, so our evenings are free. Our weekends are generally wide open, and we love to spend time outside. So we often go to the beach, whether it's sort of, chasing the birds, looking for sand crabs, splashing in the water, trying to keep sand out of dinner. Yeah, there's a lot of unstructured outdoor time, and I feel really lucky. In Southern California, you can be outside all year round. So we get to see you and Chrissy a lot, which is fun, sort of walking on the Strand. And
I got to get those kids interested in sea glass. That's my new passion. I got to get them interested in the sea glass mind. I'm going to finish up with the obsessively grateful moment, and I'm going to grab the mug, mostly so I don't forget to give you the mug.
Okay.
But I'm going to grab the mug, and I'll start to give you a second to think about it. But I am obsessively grateful for something very small, but a bucket list item. I had always wanted to see Andrea Bocelli, and I finally got to see Andrea Bocelli. So he is absolutely amazing. It was as great as I thought it would be, and I'm just grateful for having that opportunity. So, Courtney, what are you obsessing? I'll give you your mug.
That's a great question, Mike. I mean, a lot of things come to mind at the moment. First, this mug. But yeah, family, community. At the risk of making you feel a little bit uncomfortable, I'll say I'm grateful for you. So I'm grateful that you and Chrissy and your kids decided to make the move almost 10 years ago, and you joined Capital. I'm grateful that you were head of fixed income when I was a fixed income research director. We got to spend a lot of time together. You've always been so supportive of me, and I know so many others, while expecting and getting the best of us. And I'm really grateful that you're leading us into the next chapter. So we're going to continue to evolve alongside our clients, and we're going to continue to try to be a partner of choice and do a great job serving our clients. But I'm grateful that you're leading the way.
Very kind. I really appreciate you joining us. Your stories about both investing and life, I'm sure everyone listening and watching will take away so much from that. So thank you for joining us. Please subscribe to Capital Group on YouTube or wherever you get your podcasts. And I hope you all join us next time on Capital Ideas in our podcast. Have a great day.